Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. New research from KPMG and AIMA finds that hedge funds have fared well during COVID-19, are preparing to emerge more resilient, adaptable, diverse, efficient, and productive in a new decentralized environment. Joining me to discuss is Tom Kehoe, global head of research and communications for the Alternative Investment Management Association, or AIMA. We have Budzyana, Managing Director of KPMG's Alternative Investment Sector. Gentlemen, it's great to have you with us, and welcome to Trade Talks. And Tom, I'm going to kick it off with you. The report, Agile and Resilient, Alternative Investments Embrace the New Reality, says the hedge fund industry has shown its ability to manage risk and volatility while still producing above market returns for investors. Would you tell us how firms have accomplished this success during the pandemic and how well set they are for the future?
Sure, and it's a pleasure to be here. Thank you, Jill. Throughout this period, the hedge fund sector has proved itself to be highly adaptable and resilient in the face of massive market disruption. Operations not only continued in an unprecedented and decentralized setting, but worked almost seamlessly with little or no interruption. Trades were executed during periods of record volume, margin was extended, collateral posted, and trade settled. And subscriptions and redemptions largely for the industry was normal. So the COVID-19 experience, certainly for the hedge fund industry, has proven that managers' operations and their ecosystems capabilities are robust, and that some processes can be managed virtually, even during the most severe of lockdowns. And many hedge funds have seen this period as an opportunity to redefine their business models through reevaluating cost structures and working environments. And the environment has created new opportunity for hedge funds, most certainly, catalyzing industry actors to adapt to this new reality with the emergence of smart sourcing and hybrid working practices, which we believe will not only improve efficiency, but also prioritize employee well-being. And ultimately, this should benefit an industry that will emerge stronger and more diverse to sustain its future growth.
John, can you expand on the new decentralized work environment and the challenges and opportunities it creates to daily operations and employee productivity?
Sure, Leonard, thank you for having me as well. I think it's important first to sort of define the ecosystem that hedge funds operate in. It's not just the operations of the hedge fund itself, but it's very reliant and interdependent on the operations and the services provided by prime brokers, by administrators, by outsourced technology firms, by outsourced regulatory firms. So it's a very intertwined environment. And as Tom said, it worked extremely well, surprisingly well in this environment, and in the face of record volumes as well. However, it's still fragile, where it's the equivalent of having all your employees in separate satellite offices. And so preparing those satellite offices to provide all the security, the cybersecurity measures that you would normally employ, and all the devices that you would need to deploy, took some time, but we're certainly there right now. It's still very fragile because it's dependent. We're all working from home on the internet. It's dependent on electrical grids. So that's always a fragile operating environment. I think when you look at it, you say, okay, this is a tremendous opportunity to look at what works well remotely versus what works well, what needs to be in-house. You look at front office, mid office, and back office operations, and so you're looking at all those employees and how they're functioning in this environment. If you speak to the hedge funds, they will say that productivity is very high. Not that there's a lot of necessary metrics associated with that, meaning measuring, hours per keystroke or anything like that. But we're measuring it by tasks at this point. So it is operating very effectively in this environment.
Tom, 81% of respondents to the poll of 144 hedge fund managers say that they are investing in digital and IT capabilities. Half of all firms say they are investing in cybersecurity measures as well. Is this a sign that firms are accelerating their digital transformation plans as a result of the pandemic?
Yeah, most certainly. Even in comparison to as little as 5 years ago, the advances that have been made in technology has been so much that hedge funds have demonstrated that they can continue to operate their business despite the many restrictions being placed on them. 60% of all the firms that we spoke to are optimizing the use of digital tools to support their IR function, with video conferencing. We're seeing the emergence of data rooms becoming more popular among managers and investors, enabling a greater knowledge sharing to take place. And these virtual meetups and new online platforms have allowed managers to continue to operate their business and raise new capital and launch new funds. And translating to a more digital environment has also seen more firms consider the use of cloud, the technology of the cloud, and to the extent that they can use this more given the accessibility that cloud can offer versus any cost savings that a firm could make from having to physically store information. And indeed, thinking about information and data, you know, there's an increasing importance around data, which is ever more critical while working remotely. And the need for, with firms working in this virtual environment and everything being online now, there is a need for, as you mentioned, with half of all our firms we spoke to, investing in cybersecurity. And while firms feel that they've been adequately equipped to safeguard themselves against cyber threats, additional vigilance will certainly be required with employees having to work more remotely and over this protracted period of time.
Yeah, and Jill, and I think the catalyst for this entire move to digital transformation, it really focuses around the issue of data. The issue of your analog, you need risk data, you need trading data, you need reporting data, you need tax data, you need regulatory reporting data. And in a physical office, you can go around and assemble all of it. But when you're in a decentralized environment that all connected by technology, the importance of data intertwining with each other becomes even more important.
And Tom, I want to bring it back to the IR role for a moment here. Firms are channeling increased investment into their investor relations functions to enhance their capabilities, as you had mentioned before. Why are managers focused on the IR role as much as they are?
Yeah, and indeed, this was a pleasant surprise to us when we did this field study in August and September. You know, firms are continuously searching for front office revenue generating professionals that can make a real difference to the business. So, you know, the conversations we had have shown that firms are eager to find PMs, researchers, but also IR professionals, and the role that the investor relations function has performed for the hedge fund throughout this period, you know, it has been successfully supported by the changing profile of the senior individuals that now occupy these functions, whether they're involved on the product solution side or have an experience working as a CIO or are working with the chief investment officer or the CEO of the fund. And these functions bring a depth of understanding to markets and financial instruments that, with all due respect, has not always been demonstrated by IR professionals in the past. And at a time when portfolio managers are having to operate remotely in an uncertain environment like we're experiencing at the moment, having seasoned and experienced staff managing the investor base is invaluable to the hedge fund. And certainly when firms are, you know, outsourcing and considering what to outsource and what functions to keep in-house, the response of the IR function throughout this time has clearly shown itself that it will be integral to the in-house expertise of a hedge fund firm going forward.
John, you also mentioned smart sourcing in the report. More than 70% of respondents cited the success of operating in the current remote working environment as a catalyst to increase outsourcing operational and technological solutions to improve efficiency, generate more cost savings, and manage margins more effectively. Can you speak to that trend and what areas are managers looking to smart source?
Sure. I mean, I think there was a fairly consistent trend toward outsourcing or smart sourcing even prior to the pandemic. So this wasn't necessarily a linear decision now. I think what has occurred is that these operations have worked very well remotely. So that's an interesting, you know, an interesting success story. So you say if it's working well remotely, maybe if it's not core to your business, possibly you can outsource it or smart source it. And it's not about I outsource everything or I don't outsource or I bring everything in-house. It's selected functions. It could be the treasury function. It could be the trading function. It could be the middle office function. It could be a tax function. It could be any of those functions. What we do know is the asset management industry in general, across including alternatives, including hedge funds, is under pressure from fees. So if you have fee pressure, therefore you have margin pressure. If you have margin pressure in a volatile environment where assets are going up and down and you're paid based upon assets, then you need to conform your infrastructure to also be a variable environment. Your fees are variable, so your cost structure has to be variable. So if firms are looking at what is key and core to their business and making decisions based upon what's worked well in this environment.
And Tom, generally speaking, the survey suggests that larger, more established players are better positioned to attract increasing amounts of talent and capital. Smaller, less established players, on the other hand, may be seeing competitive advantages flow from less complicated operating models and greater flexibility. Can you speak to this finding?
Sure. This was an interesting observation in terms of how we're seeing the industry potentially bifurcate further. Our conversations with both managers and investors during this study found that while hedge funds were being allocated to, and that is, you know, an important point to emphasize, however, investments tended to be where there was already a pre-existing relationship between the manager and the investor. We think that particularly if this period was to continue, that may lead to a bifurcation where those that have had an established relationship with the investor or have advanced in that due diligence process before making an allocation, you know, that is likely to continue. So it may put some hedge funds therefore at a disadvantage. But both large and small firms seem to be benefiting from this experience and shifts in social expectations and norms. Conversations that we've had with the smaller managers suggest that they feel that their firm's flexibility and culture really lends them an advantage, while the larger managers, on the other hand, are really pointing to, you know, their brand recognition and the employment security that they may have on offer during this time.
I mean, I'll jump in here as well. I think that the hedge fund business has always been very entrepreneurial. So we see a lot of emerging managers throughout this process looking at opportunities in the long-short healthcare sector, in credit, in many different areas that prevail. I think they have been very nimble so far. They are also less reliant on legacy systems that some of the larger firms are subject to. So they're almost using like the next generation technology. So they're able to be nimble operationally as well as in the markets. Obviously, it's, you know, it's in trading capital that is not necessarily institutional in nature yet, because the larger pieces, it's much more hard to trade that, you know, in a nimble fashion.
Yeah, that's a great point about utilizing the newer technologies. John, Tom, thanks so much for joining us on Trade Talks. Appreciate the insight.
Thank you.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.